So in order to understand why these markets need to recover, we're going to have to backtrack to 2017 and really explore how the SALT cap hurt these markets. As you know, in 2017, the Tax Cuts and Jobs Act was basically introduced the SALT deductions cap. And essentially, this made states with high income and property taxes like New York, California, Illinois, New Jersey, et cetera, more expensive for high-income earners. Ultimately, as a result, many wealthy investors and even homeowners relocated out of these high-tax states to low-tax states, states like Florida, Texas, and Tennessee, reducing demand for high-end real estate in New York, Los Angeles, Chicago, again, those high-tax states. Now, if Trump removes or increases the SALT cap, high-income earners in those states can deduct more of their state taxes again. This is going to reduce their effective tax burden, making buying or holding that high-end real estate in these areas more financially appealing. Now, this could also slow down the migration to low-tax states and even encourage some of the people that have already relocated to move back home. Now, that would obviously revive these luxury property markets in these cities. Now, luxury home sales in New York, Los Angeles, and Chicago could increase, again, reversing the recent slowdowns. And then also, high-end commercial properties may see higher occupancy rates, again, as those businesses that relocated to the low-tax states move back to the high-tax states. Now, another excellent thing is that developers might start luxury condo and mixed-use projects again, which had slowed due to the reduced demand from the high net worth investors that relocated out of the high tax states. Now, the SALT cap definitely had a negative impact on those high tax markets. Some evidence that we can clearly see is that New York City's luxury home sales dropped by 40% after the 2017 SALT cap was put through. And that's according to the Wall Street Journal. Further, California saw a net loss of $340 billion in taxable income between 2017 and 2022 due to wealthy residents leaving. Again, yes, they're leaving those high tax states and moving to those low tax states. So does this mean you need to run off to New York City, Illinois, California, and start investing in high-end properties? Yes, there is a timing component to it. If Trump repeals or raises that cap, those markets are going to rebound, which is going to make for an opportunistic investment in that high-end property.